All right. How you doing, ladies and gentlemen? Folks and folk rooms. Hope you guys can hear me. This is Dr. Greg McLeod from Elite Traders University. So glad to be here with you on this fabulous Thursday, the 14th of September. And just glad to How you doing, ladies and gentlemen? Be with you. And we're going to get started for our presentation here. So I'd like to welcome you all into the room for those of you who are here. And we're going to make sure we record this so we can have access to it and record on the cloud. Again, my name is Dr. Gregory McLeod, and I'm the CEO and founder of the Elite Traders University. And we're doing a special presentation of the Thursday Power Hour, and we're doing it just broadcasting live on YouTube. And so all you YouTubers out there who follow me on YouTube, so glad that you should join me. I know sometimes we do registration and things like that. Just go raw and go live. And this is going to be a fantastic course. We're going to be teaching part of our Thursday of knowledge bombs that we're dropping. And we're going to talk about the problem that traders have. I've talked to a lot of traders, a lot of them that come through our program, and many of them have the difficulty of not being able to identify the strongest trends. And we all hear the whole saying that the trend is your friend until it ends. But how do you determine the strength of a trend? Okay. When do you know when the trend is going to end? Is there a way that you can know when the trend will end? And I want to give you some good news that I'm going to share with you some tactics, some tricks, and some tips that can help you determine the strongest trend. Because if you can find the strongest trend, it's going to last a longer amount of time. It's going to give you more low risk, high probability trading opportunities so you can make more money, right? So that's the whole key. And if you have a weak trend that is whipsawing you around, and how many of you guys have been whipsawed in the market? You know, if you've been whipsawed, it's usually whipsawed because there's not a lot of momentum or not a lot of liquidity, not a lot of interest. Maybe the market could be waiting for some type of news announcement, like we had the ECB rate announcement at the time of this recording. And so we saw maybe the euro going flat up until 7:45 Eastern time. We saw this huge volatility, and then the trend got extremely strung up, for a rally, and then it dropped into a downtrend, right? But so how could we determine the strength of a trend, right? And so you can tell me in the chat box, how do you determine the strength of a trend, right? And there's many things you can do, and I'm going to show you how you do it manually. Just using the simple things that you have available to you on your trading platform, you can actually determine trend strength. And then I'll show you a really awesome tool that you can use in order to determine the strength of a trend. That's a dashboard that you can plug right into MT4. And I'm going to make it so affordable that you'll just love it. In fact, it used to cost a whole bunch of. It was very expensive, but now it's not so expensive now. Okay, I am going to find. Let me get to the presentation, and actually find out where it is. Okay. Okay. All right. And I'm going to share my screen. And I'm going to share, I'm going to put it right on this screen right here. And that way we can share screen. Where's that button? There's always that button, right? It's never like right where you need it. Share screen or share screen one, maybe share some sound perhaps. Okay, all right. And the view, how about view? Slideshow view, okay. All right. So I'm going to 4 shockingly smooth profit trends hidden in today's roller coaster from heck FX market. And I'm the trader transformation architect. I just want to direct your attention to the risk disclosure on your screen to make sure you understand all risks associated with foreign exchange trading. And I've been doing this for a long time, for almost 28 years. I've traded stocks, futures, options, commodities, and I'm one of the foremost authorities of short-term day trading called scalping. And I help people pass trading challenges, prop trading challenges, where our focus is helping people get $100,000, $200,000 in a prop trading account, which they can keep 85% of the profit. So I'll give you some more information about that too. Okay. So I want to, first of all, congratulate you for investing time into your success. Powerful changes cannot happen without action, effort, and investment. We all invest in what we believe in, okay? Now, Jim Rohn said that profits are better than wages. Wages make you a living, but profits make you a fortune, okay? Now, in this workshop, you're going to learn how to correctly identify and trade with the dominant trend using two methods, okay? And you can quickly filter out for Forex, CFDs, and particularly gold. I love gold. Gold and oil, NAS 100, beautiful, beautiful. If you guys, how many of you guys trade the NAS 100? I wish I could see the chat box, okay? But we can quickly filter and we can look for those strongest trends, right? So trend spotting is essential to profitable trading. If you're not able to spot trends, or if you don't take the time to do it, you're going to be throwing away your edge, and you will never be a successful trader without this skill. And I'm going to show you something that you can do immediately after this workshop that can give you quick, positive results in your trading, okay? Now, along the way, I also got some chart reading quizzes for you that clearly explain why most traders misread trends and lose money, while those who know the secrets to accurately reading trends make money, okay? Now, I'm going to show you how the results regular traders who have used what I show you today to achieve great trading gains, including one trader who used it to turn 800 euros into $55,000 in just 2 weeks. And as you'll discover, that was just the start, okay? Now, I'm also going to promise to tell you about an offer that will let you take your trading to the next level and build on what you learned today. Whether or not you choose to take me up on it, what you're about to discover today will be of tremendous value to you, okay? So that's great. Let's go ahead and get started, okay? Now, you've heard that the trend is your friend, right? It's written in all the trading books and videos on the subject. But for most traders, the trend is a bipolar, manic-depressive bully that beats you up and steals your lunch, right? Now, or do traders misread the trend? Maybe they don't understand their friend. You know, it's almost like a marriage. You know, maybe you don't understand your wife doesn't understand you. Maybe you're just misunderstanding what the signals are, right? And the major reason traders lose is due to the inability to identify trend direction and trend strength, okay? Now, retail traders often try to pick tops and bottoms in the hopes of making a lot of money, right? And sometimes traders think they are trading with the relevant trend. However, they choose the wrong trend based on the wrong time frame, okay? So let's define the trend. Higher highs and higher lows make up an uptrend, right? As you can clearly see, this is a pound dollar daily chart, and you can see clearly higher highs and higher lows as price moves from the lower left-hand side to the upper right-hand side, okay? A clear definition of an uptrend. And we can see if we label them with the letters HH for higher high and higher low, it forms, you can see kind of a step pattern, right, in one direction, right? Now, why? It seems easy enough to make hundreds, if not thousands, by trading in the direction of the uptrend, right? But as they say, hindsight's 2020, right? You know, the whole thing, old Monday morning quarterback. It's easy to like look back there and go, yeah, I could have made $1 million if I did this, right? But Monday morning quarterbacks don't make any money either. And neither Aaron Rodgers is going to get paid, even though he got injured, right? But lower lows and lower highs make a downtrend, as you can see here in this diagram. We can clearly see that price is moving from the upper left to the lower right, and that defines our downtrend, right? And so you can see that if we were to get short, we would make more money on the short side than the long side, okay? And we can diagram that out. You can even see that we had higher highs and higher lows to the far right, or far left, I'm sorry, and then we saw break structure, right? And anytime you get the price action people, they'll have that British accent. They'll talk about structure. It's breaking structure. So we went from a higher high and higher low to a lower high and a lower low, right? And then the trend changed, right? Direct. So great, another 1,000 pips to the downside missed. Oops, right? So if trading with the trend was so simple, why do so many traders lose? And why do they miss these trades that happen with regularity, while others catch these moves on a regular and on-demand basis? So this is like a typical trading day for most of my students, using what I'm going to be showing you to get you guys on the right side of the market. The big question is, how do you get to the place of consistent profit? Consistency is one of the two things that most traders, when they talk to me, that Greg, I win some and I lose some. I win it on Monday. I might start losing it on Sunday, Monday, and make it back on Tuesday, Wednesday, and then give it all back on Friday. Now, how many people are there in that camp, right? And so if you don't have consistency, it's hard to have confidence, the other C, right? I mean, how many guys would like to get C's in trading? Forget getting an A. We don't want to get C's. We want to be confident. We want to be consistent. And if we're consistent, we can be certain, we can be clear, we can have this whole piece of it about being certain, being consistent, being confident, right? And how do we get there? Well, I'm going to share with you a simple method that you can use right away that will dramatically improve your trading results. It's the best thing since sliced spread. You may say, Greg, I heard all this stuff before, and I'm still losing, right? You tried this little gadget, you tried that little gadget, and it don't work, right? Well, now, whether you think you have heard it before or not, you'll never have the confidence or consistency unless you can not just identify trends, but also measure the strength of those trends across different time frames. Now, two critical pieces of trading intelligence have been left out when learning to trade trends: time frame and currency strength, okay? And the trend is the tendency for price to continue in one direction over time, okay? Now, and a price trend can move in different directions in different time frames, okay? I know it's kind of crazy. I mean, how can it be up on a 4-hour time frame and down on a 5-minute time frame, right? Because it's multidimensional. It's what we call fractal, right? And so if you can, it's like the multiverse, okay? You're used to on the multiverse, maybe Spider-Man is black in one dimension. And then, he's got wings or something in another dimension, right? And he's a woman. Sorry, a woman in another dimension, right? Multiple dimensions, right? Price is the same way. It's different directions in different time frames. So if you bet against the trend, you are guaranteeing your own failure. You might as well stop trading, open up a bank CD, and take up knitting, okay? And let's take a little quiz to show what you're missing. Now, what is the trend direction? Are you a buyer or are you a seller? I'll give you a couple minutes. So some buyers, some sellers. Okay. Well, really, okay, and what is the trend direction here? Are you a buyer or a seller here? And you're probably saying, okay, it's moving down, so maybe this is it, right? And he's like, it's got to be a trick question, right? He's like, well, this is not this obvious, right? Well, the downtrend, well, that little uptrend is part of this. That part of the little uptrend was part of this overall downtrend. So the overall big trend is down, but the trader looking at just a small section misses out on the big gains, especially if they're trading like a pirate with using one screen, one time frame, and looking at their phone, and they think they're in an uptrend, right? They're hugging the elephant's trunk and think it's a snake, right? Because they only can see part of what's going on. This is called time relevancy error. You think it's an uptrend, but it's really a downtrend, right? Because you're looking at too small a piece of time, right? And here's that other piece, right? Now, price is moving in a downtrend, but if a trader was not looking at the big picture, they would have missed the thousands of pips getting long. The uptrend, there were more pips available, okay? Now, you can see in each of those markets how at first glance, traders can be tricked when looking to trade trends, right? Now, most traders make the mistake of looking only at one time frame. I call it trading like a pirate. Pirate has an eye patch, he only has one eye, And, because maybe he got shot in the eye. And then he has one hand, he has a hook because maybe a guy took a sword and cut his hand off. And then he has one leg because a shark bit his leg off. Because why? Because he couldn't see where the shark was coming from because he had one eye, right? So I tell my traders and my students in my Elite Traders University is don't trade like a pirate. Trade with two eyes. Trade with one eye on the higher time frame, one eye on the lower time frame. That way you won't have that time relevancy error. You know where the trend, where price is truly doing in relation to the higher time frame. Okay. So, and I'll show you how that looks. So if you were just trading with one time frame, then you suddenly get blindsided by the dominant trend. And I love this commercial. This guy's like looking around and then boom, he gets hit, right, by a high cable bill. So the biggest and costliest mistake a traders make is not looking at the big picture. The big picture, taking that 50,000 foot view, okay? Like in a war, the 50,000 foot view, the satellite view, whoever has the high ground has the advantage, okay? Because you can see the territory and get the context of where price is. So now you have an edge over the competition who's only looking at the phone or a tablet or something like that. So price trends in different directions on different time frames. Whether you are a short-term trader, scalper, swing, or position trader, you should look at the larger time frame for guidance. You get that 50,000 foot perspective of the markets by starting with daily charts, and now you look at monthly charts as well, where we get that big overall view, that big satellite picture, orbital view, of price. So you know where it started, where it began, where the resistance levels are, where the support levels are, where it was moving up, where it was moving down, where are the key levels that happened. Price has a memory. And sometimes, like we had 9/11 recently, and sometimes prices sell off because of some historical thing that happened. There was a stock market crash in September, a stock market crash in October of 1987. And so prices at certain areas around certain times repeat themselves. But like I said, if you don't know history, you're bound to repeat it, right? So currency trends are divided into three types according to their direction. This is also true for CFDs and commodities and stocks and options too. But I'm just going to be talking about the gold and currencies and commodities right now. Okay. But it's true for all markets. We have the things that are either in an uptrend, which I depict as green, downtrend, which is red, and sideways, which is like gray or red, right? And so you have price that follows this kind of pattern, right? Where we have this thrust and reaction and thrust and reaction and thrust and reaction. They move sideways, right? And after you notice how price is trending, you're making money, right? But then the next day you wake up and say, yeah, man, I just love trading pound yen. I love trading gold. I made so much money yesterday. Let me go back in there and trade again. And the next day, price takes a pause. We go from high volatility to low volatility, and we're in a chop. And you end up giving back all your profits again, right? And then it starts trending again. So uptrend, sideways, downtrend. In fact, the market only trends like 20% of the time. 80% of the time it actually stays in the range. If you look at some of the prices on the pound right now, I mean, we're like 120, about years and years ago, and we're still, the low of 95 on the euro. We hit that back in 2000, right? And we're already back up. So we want to know where we are in the age. This is like the age of a trend. It's when it's born, it's young, it's vibrant, it's a teenager, then it gets to middle age, it gets a little older, then now it's on, milk of magnesia. It's got a cane and a walker, and it's on its way down. But the trends, they revive themselves and come back. So we're looking to buy reactions in an uptrend and take profits in the thrust when we're in an uptrend, right? Lining up two or more time frames, you want to line them up, right? And we line up those two time frames that are reacting and thrusting in sync. It increases the odds of finding trades with the greatest profit potential. Simply put, if the higher time frame is trending up, we look for pullbacks against the lower time frame. it's like buying at a discount, right? We know that price went up to like, oh, maybe it's a house that's $400,000. And now maybe somebody got divorced or someone died or got sick or got laid off or they're moving out of town. They got to relocate. And now that house has to sell quickly. So now it's no longer $400,000, but now it's $375, right? A pullback, a 20% pullback, a 30% pullback, those Fibonacci levels are discounts, right? You know that. When we say like 50% off, that's a 50% retracement off the high price, the pullback. So that's at a discount. And if you can buy it at a discount, it's value, right? And usually prices will trend back up to their old high. That's because the typical trend continues moving higher. So the distance between the discount and the old price is our profit. So we have that'll be equity, right? If you're flipping houses, we're flipping currencies, we're flipping gold, right? But it's the same principle of flipping houses. You want to buy low and sell high like Snoop Dogg, and then the opposite, we want to sell high or sell at a premium and buy back low. Okay, that's a lot I gave you, so I'll let you digest that for a little bit. So in a big time frame, you may have the market tide is up and you're looking at your phone. You say, oh, look, trend line break. I'm going to get short. Ooh. You get short, you go to the bathroom and come back and boom, you got blown out. Don't you hate when that happens? Am I talking to you? Am I reading your mail? Say, how does he know that? Hey, you're spying on me. This camera's like two ways, right? No, it's typical because people want to pick tops and bottoms. It's only human nature. Oh, this thing is so high, it can't keep going high. Oh, look, it's a red candle. I'm going to get short. And you get blown apart. Boom, right? So in the small time frame, the downtrend is really this little pullback. We zoom in is actually a buying opportunity, right? It's not a downtrend. It's a retracement. It's where we can buy at a discount. If we use oscillators, it is oversold. Oh my God, it's oversold means it's cheap. It's cheap relative to the previous price. And the distance up, it's the potential profit that's built in, right? So a trend that is going up can be a sell setup, while a trend that is going down can be a buy setup. And that's what you really got to wrap your brain around. Sometimes I go, well, that doesn't, and you might have to watch this again, right? In order to understand it, because probably no one's really explained it to you this way. Because I know my students are getting a little big aha moment. I'm going over it. I thought, well, we've been going over this. I said, well, you're teaching a lot different, Greg. And it's like, yeah, it's like 2020, whatever. And it's getting better and better, right? And so the question that needs to be answered, which time frame are you trading? Okay. If you don't know what type of trader you are and the time frames that are important to you, you might as well stop trading now. Just stop. Just give it up, right? But you want to know what your style is, okay? If you're an intraday trader, you want to look at your hourly 15-minute, and you want to hold maybe a few hours, right? However, you're a swing trader, you may look for your trend as your daily chart. Your first time frame you look as your daily for your trend direction. If it's up, then you look for your entry chart. You want that 4-hour chart to be going down in the opposite direction of the daily, because that's going to give you your buying opportunity to be able to get it at a discount. And you're going to hold it for a few days because for 4-hour candles, 6 candles is a whole day, right? Now, if you're a positional trader and you're going to hey, you're a busy executive, you're a busy mom, don't have time, you can look at that weekly chart, put that trade on the beginning of the month, and at the end of the month, close it out in a few weeks and have a goodly amount of pips using smaller position sizes and wider stops. You can ride the trend because currencies and gold, they tend to trend very well. And so you can do now, not me. I'm an intraday. I'm like short term, like 1 minute and 5 minute, and my trades last less than an hour. Okay. And if you want to find out more about that, just reach out to me to say, hey, Greg, send me an email if you want to learn how to do that. And I can show you what we do. Okay. Now you have to be confident in the answers to these important questions. Are you a swing position or day trader? Know what type of trader you are. You want your trading to fit around your lifestyle, not your lifestyle to fit around your trading. Okay. And too many people I talk to, and it's very sad. I talked to one man, he was an older gentleman, and I said, "Oh, okay, you're learning how to do this, and this is great, you know, and how has you been, you know, he's been unsuccessful for almost 20 years, 20 years." And I said, "Well, what does your wife think about it?" It says, "I never got married." I go, "Why?" Because I never made enough money at this in order to have my family. I'm like going, wow. And I almost started crying with him because it's like he gave his whole life to trading, and he was no wiser. No, I mean, he didn't have anything that made him any money, right? And he put off having kids, the relationships with a significant other, being able to have those type of memories. Why? Because you didn't have a system. And I just talked to another young man in which, you know, he's trying to trade and, you know, really eager, but, you know, people, you know, oh, they want to see money, and relationships get broken. Kids become Forex orphans or trading orphans, and women become, widows. So widows or widowers, right? So you want to to learn this fast so you can actually prove to people, show people, help people that you want to do, and also participate in life. But you don't want to give your life to this, because there's more to life than trading. I know it's hard to believe, and I know everyone's like, no, but there is more to life than trading. So you want to know what time frame that you're going to use for your trend and what time frame you're going to use for your trigger chart. Okay. Now, here's a multiple time frame chart. You need to want to take a screenshot of this. Okay. If you trade on a daily chart, you want to find that trend on the weekly. Okay. So what I do, I put the higher time frame on the left-hand side and the one I trade with on the right-hand side. So if I trade off the weekly, I have the weekly on one side and I have the daily on the other side. So it'll be switched around, right? If you trade in the 4 hour, you want to look to a higher time frame. You want to go like the time frames are usually a factor of 4 or 5 bigger, right? Daily, there's what, a week, there's 5 days in a week. What? 4 hour chart, there's like 6 4 hour candles in a day. Hourly, there's 4 1 hour candles in a 4 hour chart. 15-minute, well, there's 4 15-minute candles in an hour. 5 minute, there's 6 5-minute candles in a 30-minute. In 1 minute, there's 5 1 minute candles in a 5-minute chart. So this factor of 5, it allows you to understand where price is moving in regards to the trend. So you know what the entire picture is. And sometimes I look at some people look at a third, have like a triple filter process, but I use a dual filter. I find dual filter is enough, especially maybe you only have one screen. So like, great, I don't have a bunch of screens. I go, you can take the MT4 and I'll show you how to divide that up into two sections, right? So here's what I'm talking about. Yeah, it's, you notice how once we are on the other side of the trend, we're in a downtrend. Why? Because we have a lower high. We broke structure. There's a structure, right? We broke a trend line. If we draw a trend line here, we broke that trend line. We have a lower low, a lower high. If you took the long, it was only 259 pips. You took the short, it was 473. Yeah, it's good. 259. Don't get me wrong. 259 is not bad. 473 is better, right? And if you were, you got the timing down, if you're using the pip and run system, you would hit it down and hit it north, south and north, and you would have like, over 700 pips. But if you don't, what happens is what people do is they see this uptrend, they get in this, then they forget about it, right? They don't take profit. They don't know when to get out. And then they come back and this thing is down here. And this will never, ever, ever come back long before you blow up your account, unless you had a stop, right? If you had a stop and were stopped out, that's great, but you gave up money because you're swimming against the tide. Because now this thing drops for 1,700 pips, right? It'll never get back up to there, right? And so you say, oh, wow, look, I'm going to look for that dead cat bounce. I'm going to get for the counter trend rally. Don't get me wrong. I teach counter trend trading in my system. Right? But if you don't have a system, you really need to stay away from this because this is dangerous. you're like swimming against the tide. I remember going snorkeling in Maui with a good friend of mine, and they said, stay at the front of the boat and hold on to the boogie board or the rope. Don't go into the back of the boat, because if you do, there's a riptide that will take you all the way out to Tahiti. I'm going, I'm not going back there. Says, and don't try to swim against. If you are caught in it, just relax and let it take you out to sea, because if you try to fight it, it's so strong that you'll get so tired you won't be able to stay above water and you'll die. And it's like, this is not fun. I don't know why I'm here. Get me out of this suit and out of the water. No, but it's like, you want to swim with the turtles and the dolphins, and they think, if I go back there and you just, and all of a sudden now you're drifting back there because the tide, the thing starts, it's starting to drift you. It's by naturally, this is drifting. It's pulling, right? And that's what happens here. You're here. Oh yeah. And it starts slowing down. And then you go to the bathroom or take a phone call or go to sleep and you wake up. Right? So here is okay. I hope I made my point. But look, up is only 670 pips is not bad. But look, you get 965 down. And if you had tip and run system, you go up and down and take them both, right? You'd be a greedy bastard here. You can take them both, right? Same way here. Notice how against the trend moves is less pips, because we want to put the trend as your friend when you go in the trend, right? Now you try shorting here and it goes against you. So if you short at the wrong time, you're going to get jacked by the market, right? Okay. So many years ago, when I first started trading, I was using hot tips and newsletters to find great trades. Those ones that, hey, we're looking at this, right? And you get into it and like, oh, that sucked. I lost money. I had tripled my money on the very first trade that I ever did, and it was something that was on TV. It was a hot tip on soybeans. It was the easiest money I ever made trading soybeans. I tasted victory, but it turned into the agony of defeat. I was given a fish, but I didn't know how to fish. How many people know what I'm talking about? I had a young man that had passed the trading challenge. And he had $100,000 funded account. You're funded. Oh my God, this is so great. And I asked him, why are you talking to me? Why are you asking me for help? He says, because I just got some hot tips and I passed the audition and I want to keep my account. So I want to learn how to trade now. I go, oh, okay. So what did you use? Well, I had some signals. So you got fish, but you don't know how to fish, right? Well, you got to learn how to fish. So pull your money out. He was up $4,500 or $5,000, and I said, okay, good. Trade small. I gave him advice. I said, I'm not going to charge you this. Hey, use smaller position sizes, scale it down, risk no more than 1% on that account, because this is your nest egg. Okay. And then I called him back into a few weeks later, and sure enough, he wouldn't answer my call. So I called again. I left a message. I go, are you okay, bro? Where have you been? And he goes, oh man, I'm gonna pick up the phone and be a man and just tell you that I blew up my account. I go, oh my God, you blew up the $100,000 account, bro, dude, you're home free. $100,000. If you made typical traders do about 2% per week. 2%, okay, $2,000. $2,000 a week times 8,000 a month. Not bad. You get to keep 80% of that, $6,400. That's not bad. My guys can do that in 2 hours a day. And you got another 8 hours free to do that. Oh man, you're home free. Saying, no, yeah, I went too large and I traded gold without a stop on the signal. And I go, oh man, so he was on his way to work. Yeah, he had to go. He had to get a job because he was given a fish, and it was a good fish. Good, yeah. But remember, if someone gives you something, that means they can take it away. But if you know how, then it can never be taken from you. Okay, remember that. So when those tips and trade recommendations went wrong, it happened to me. It happened to me 30 years ago. I was left high and dry with lots of losses and frustration, right? The only thing growing on my side was frustration. I wasn't growing a cash. If I could cash in on frustration, I would be a millionaire, right? The definition of insanity, guys, is doing the same thing over and over again, expecting different results. And I had to do something different, right? I knew I needed help. I believed I could just make money in the markets, and I was determined to make it work. I'll just sit on the beach, press the button to make money. So I sought out mentorship. I was a student of the late great Mark Douglas, author of The Disciplined Trader and Trading in the Zone. And I learned a very simple but powerful success key. And this key unlocked numerous large profitable trade setups. And being disciplined and trend spotting what turned things around for me, right? I could take numerous trades in the same direction because I had the confidence and conviction to take and hold trades longer or scalp numerous times around a core position. So even though I had a core position, I could keep that core position on in the direction of the trend and do some counter trend scalping around that. But I understood what the main trend was. Yeah, I know you're going up, but I know the true trend is down. This is just a counter trend rally. And you need to be able to understand the difference between a counter trend rally and the true trend, right? And how many people in the room you can do that? Because if you can do that, you've got this. I'll see you on the beach. Next time I go to Maui, hopefully they rebuild everything in Maui, right? Anyway, we'll talk about that. New favorite place, Mexico. No, okay. So I learned where the bulls and bears live, right? And so bull trends live above the 200 simple moving average or SMA, and bear trends live below the 200 simple moving average or SMA. Okay. Now, and the reason why there's like 200 trade days in a row, 221 trading days, you subtract out weekends and holidays, 220 trading days. So we got this almost like a line of scrimmage or the demarcation zone, right? It's like the Mason-Dixon line, right? It's a separation. So the strongest trends are ones that are farthest away from the 200 SMA. And the currency pair families that exhibit bearish and bullish strength indicate on multiple time frames, they're the best to trade. So the 200 SMA representing the long-term traders, adding a 50 SMA represents the medium-term traders. And here are a couple examples that show this how powerful this combination of simple moving averages can be used to confirm strong trends. And this method allowed me to forecast the crash in oil back that I wrote about in Daily FX when I was currency analyst in November of 2013, right? And this is called the depth cross on oil. In fact, if you look up depth cross on oil and Greg McLeod, you can search me out. And I'm the currency analyst, right? I work for one of the largest forex broker dealers in the world. And I basically use this to forecast. This was the high of oil, and we dropped all the way down like $36 a barrel, right? So the dollar CAD above the 250 SMA, indicating this is a strong trend. This is an example. And we would only consider long or buy trade. So here's what we call a golden cross. The death cross is when they cross to the downside, what crossing with a lower moving average is the smaller moving average is crossing below the 200. Well, if we have smaller moving averages crossing above the 200, that gives us our golden cross. And it's a bullish signal indicating a strong trend is underway. And we can see that as the SMA, 50 SMA is crossing above the 200, we also have prices making higher highs and higher lows, right? Now, if you're looking at a smartphone or something really small, you can see there's little downtrends here, and you might get caught up in those. Now, once we get so far from the 200 SMA, we usually have some type of correction, a corrective move, A, B, C, and then we have a resumption of the trend, right? Now, here is a sample of when we have our death cross, right? When we have the 50 crossing below the 200 SMA. The 50 is green, the 200 is red. This is called a death cross reversal signal. This is the Aussie dollar, which has been below the 200 and the 50 SMA. This is a strong downtrend. You can see the lower swing highs and lower swing lows. We would only consider short or sell trades. Though there's some counter trend rallies you could take, but if you just stayed short or adding to your shorts or harvesting around a core position, you made more money on the downside than on the upside, right? Again, here is the pound Aussie at around $10 a pip. $2,228 move. I actually took that trade. You can see down below. So actually, I'm not, they said never trust a skinny chef. I eat what I cook, right? I'm not skinny either, and I was a chef. I used to work for Universal Studios years ago, in the catering department. So I cooked for a lot of people. So I actually took this trade. This is not theory. This is actual stuff, right? So you can easily just pop 2 moving averages on, and maybe people see moving averages as some type of magical. It's just telling you. See, it's like the report card, like the GPA. If your GPA, my daughter's GPA is 3.7 or at UT Austin, and that's an A, So unless she got a B or a C or something, because she has such a strong GPA, it's probably not going to go down too many points. Why? Because it's a strong uptrend, right? So here's something, and in fact, we have created a different template that actually changes color, which is pretty cool. Where I love colors. I'm a sucker for colors and shapes. I need as much confirmation as possible to keep me on the right side of the trade. Okay, I need red arrows, red lines. I need the background to change. I need flashing and alarms and things in order to make sure that I stay aware and stay awake and stay present and not get sucked into, oh wow, look, there's a rally right here, right? How many people have done that? You've mistaken it for uptrend. You wind up pressing the buy button instead of the sell button. Because you see a big move. Oh, look, a bullish engulfing candle. Wow. Oh, snap. That was just a trap, right? Well, it's very simple. We just hey, the green is below the red. We're going to stay short. And then we went to what? High volatility to low volatility, chop. And it's going to chop up and down. And you really shouldn't be, trading this anyway. And if you do, one hot tip is you can go into a lower time frame and you can find uptrends and downtrends and uptrends and downtrends, but you gotta go low in the smaller time frame. I drop down to a tick chart, a 5-minute chart, and I'll eat that out. I call it sucking on a chicken bone, right? I mean, this is like nice, juicy breast meat or a drumstick or something. Yum, 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 yum. But then you get those relatives at Thanksgiving, and they're just like sucking on the, they're eating the gristle and breaking it open, sucking the marrow out. It's like, we have more turkey. You don't have to suck the bones. And many traders, I call the bone sucking trade, right? Where you're like trying to get something going and nothing's going on because it's no meat on the bone. It's over, right? Now, this one, and what happens, you get chopped up in this. Oh man, I got stopped there. I went long, I stopped there. And then you run out of money. Then you got $10 in your account, and then all of a sudden you get this, oh man, I hit this thing for 100 pips. Oh wow, we get 10 cents a pip. Big deal, big whoop. You made $10. But if you saved your money, didn't try to suck on the chicken bones, but waited till the market came back, you got a nice crossover, breakout out of this consolidation, right? This low volatility consolidation breakout. And now you've got your capital left over from when you made money on the short, and then you can move up, right? But sometimes we get fear and greed, and we fear missing out. Oh, I'm going to miss out. I'm going to miss out. I'm going to miss out. And all this is just accumulation and distribution right after that. So I pipped around 108 pips with $1 yen. And here we go. Boom, boom, boom. So right now, at this point, you have a simple yet powerful system for finding trends and trading with professionals successfully. If you just do that, the 2 time frames at least, and using a 50 and 200 to filter your trades, and that, stop trading like a pirate, get off your phone. I know it's sexy. I'm sitting by the phone. I'm sitting by the pool with my phone. I'm making money on your phone. And my students do that. What they do is you look at your desktop and you got your strategy for the day. Okay, dollar index is up, euro and pound are trading down, and I'm going to be on my phone and I'm just going to take shorts because I know the trend already. And so you are doing it in the context of you have the knowledge of the intel that you gathered from looking at the higher time frame chart. okay, and you're looking for great short opportunities in the direction of the trend on your phone, that's perfectly okay. But to purely just trade on your phone and not check higher time frames and not be conscious of what's going on, it's trading suicide, right? So, however, in this process of looking through all 28 currency pairs and comparing all the time frames can obviously be a long and tedious and time-consuming process. And finding currency relative strength was the added factor that dramatically puts your odds in your favor, but it also requires comparing multiple pairs and time frames to find the strongest trend. Okay, so working at the brokerage, I knew a fellow course instructor that was very successful. He was a long-term trader and he was making thousands of pips per trade. His secret: he spent a lot of time comparing currency strength based on moving averages, right? So currency strength is critical to successful trend spotting. So you got the dollar, right? You got the USA and the Japanese yen, and you're looking at which one is stronger. Usually the dollar is stronger than the Japanese yen, right? And that's going to lead to a dollar yen uptrend. So we had a lot of respect for each other in those trading styles. He was amazed at how fast I could scalp the market on a regular basis. And I was amazed at how many times oftentimes made 1,000 pips, right? So I invited him to a secret lunch to discuss how we could actually work together. And there he is. There's my buddy, old Rich Crevo. And there's my former boss, Tom Long, at the brokerage. And we would go out and have lunch. And the secret lunch, we worked on something called Trend Spotter, a very powerful indicator, right? And so he wanted to diversify and create some immediate income. He wanted to learn my short-term pip and run scalping method. So we did a little exchange. So I most certainly wanted to learn how to pull thousands of pips out of the market like he was doing. And so at this lunch, I listened to all the pairs he went through and all the time frames he was looking at. And I saw the giant notebook of what he did. And I said to myself, I ain't got time for that. However, I told him that I do something similar by scalping in the direction of the 30-minute trend. I told him I might be able to automate a lot of his analysis so he could only need to press a couple of buttons and crunch out those strongest currencies. And after investing thousands of dollars in development and time and testing, I have come up with an automated system that instantly and continuously monitors 28 currency pairs for the strongest trends on various time frames, right? And Rich and I reminisced about the thousands of people we trained while working at one of the world's largest brokers. We talked about how many of our students became successful. And the one thing these traders had in common, once they started trading with the trend, their profitability increased. However, we were saddened by the people that we could not help because these people stubbornly insisted on trading against the trend. No matter how many times we tried to tell them in our webinars, emails, and forum posts, these hard-headed traders continued to experience failure because they could not recognize and trade with the trend. We both agreed that determining the strongest individual currencies is the first step in choosing the best trends to trade. This is how a one-of-a-kind trading edge named Trend Spotter CSI was born. CSI stands for Currency Strength Indicator, right? And so, so this is it. It is a dashboard that plugs into MT4, and so I know the UI is a little, it's a little old, a little dated, but it cranks out some powerful data, some information. I'm going to show you in a minute how this actually works. So you can choose one of 9 currency time frames, right? By using the toggle of the switch, you can go day or 4 hour, 2 hours. You also can adjust the moving average period from 1 to 999, right? And when you do, then you get this the currency strength for that particular set, right? So immediately you'll see the strongest and weakest currencies in this section here, the final results. And here we have a daily. We're looking at everything up. The 200 moving average is what we're going to be using here, and the strongest was the pound. The weakest was the Kiwi, right? So if we can pair the pound and the Kiwi, we get long the pound and short the Kiwi. We have a very strong uptrend, right? And then we could see below where the pound has a strength of 7. 7 is the maximum. Yen is the second at 5, and euro is at 3. So the whole idea is like you want to pair a strong currency with a weak currency and be long, strong currency, right? It's like being a fight promoter. It's like being Don King, and you got this really super tough, you got this fighter, you got Mike Tyson, and you got this other guy, like this whippy guy. You put them together in a ring, and then you bet on the guy that's stronger than the other guy, right? You bet on Mike Tyson. So you can see how these other currencies compare, right? You can stay away from the neutral ones. They're like yellow, but you want to go for those extremes and pair them together. And this proprietary trend spotter algorithm, or TSA, provides traders with additional confirmation of currency strength on 28 currency pairs in real time using an SW, or strong weak bias, based on the distance price is from the moving average, and also the speed and the angle of the moving average as well, right? So we simply choose the pair that is identified as strong to enter long, right? And they simply choose a pair that is identified weak to enter short, right? We can use the pairings here, or we can manually pair it ourselves, right? So TrendSpotter CSI goes to work for any trader to quickly compare and analyze individual currencies to determine their underlying strength automatically. Now, this provides you with a set of strongest bullish and bearish trends to trade quickly, so you can have more high probability, low risk trading setups. And this means more profit in less time in front of the computer screen, so you can have more money and free time to spend with your family and friends, or to pursue hobbies, vacations, or other pursuits, right? So before I share more, my friend Richard Crevo, you could even look up some of his articles on the LFX that are still there. And Rich, he taught high school history and economics for 9 years. He was first introduced to the FX market and began learning how to trade in the late 90s. And he was an instructor at FXCM from 2005 to 2012. And currently he's a full-time trader and mentor teacher. And so simply the facts remain that losing traders often misread trend direction and give their money to those that trade with the trend. Trading is a zero-sum game, with losing traders paying winners, right? Which means that people who get the trend right get paid, and those who don't get the trend wrong end up paid, right? And so former Wall Street analyst and journalist Henry Blodgett wrote this comparison between professional and retail traders. Most Wall Street traders have skills, information, and tools that day traders can only dream of. Trading is a zero-sum game. Markets moves aside. Every dollar won by one trader comes out of the pocket of another trader. Day traders competing against Wall Streeters is the equivalent of a college football team or Pee Wee team, depending on the day trader's skill, competing against a pro team. Is it possible to win? Well, yes. My Forex students had tremendous results from the very fact that they start my trader transformation process. And my proprietary trading process shifts the trader's mindset from that of a retail trading victim to that of a powerful market-making dealer. It means looking for the place where the most people in the market will be hurt by an adverse move. It may seem a cruel view of the markets, but it's a reality that's embraced by us winners. A testimony from my students. Here's Charles B. Tremendous trend spotting run, 345 pips today and counting. That's awesome. Sky's the limit. Thanks for the confidence. It's like figuring out the matrix. And I took the blue pill, or was it the red pill, right? So there you go. And these are some trades that he's posted, right? My student Matt C scored 469 pips in 3 minutes using my strategy, and he's got his big breakout, which is very cool. And then got the Dr. Green, 22 wins, 0 losses for 189 pips. And then Adrice, she made 60 pips on the platform, and was very cool. And she found all these trades on her own. 1, 2, 3, 4. Why? Because she got in line with the trend, right? And here is Trader DY. Too close to Christmas, trading cautiously, grateful to be safe before going to bed. Thanks, coach. Made 50 pips, right? And this is different people from different, Hemi, great trading, scalping 23 pips, 30 pips on EC, 18 pips on GJ. Just, is another one, 70 pips on dollar Swiss, 34 pips, 34 trades and 4 losses. Thanks so much, Tracy. Tracy wound up being number 1 in a world trading competition. She ended up number 2 in the end, but she was number 1 for a long time using our process. And warning, the results are not typical of the star student here. This is Andre K, 800 euros to 55,000 in 2 weeks. So I have to thank you, Greg. Really made my transfer from the stock market to the Forex market a smooth ride. I made more profit in April than I've ever made before. And he turned that to 55,000, and that was live. And then he did another 1,000 pips in a week. And he did another 1,000 pip week here as well, right? And then he took that 100,000 to 310,000. So I've taken your advice, but in total, I'm up at roughly 310,000, up from 100,000 since the beginning of April. Crazy is what it is, but I'm a happy pipper. Congratulations, right? And then, so when I actually showed Rich the CSI, he was floored because it's going to take him. He doesn't have to look at all these currency pairs and all these moving averages, right? And it would also unshackle many from their trading computers. TrendSpotter CSI is like having your own personal quantitative analysis who never takes a nap, never takes a day off, and who just grinds nonstop working for you 24 hours a day, 7 days a week. And what could you do with all the extra time and money, right? You can volunteer, you can donate, you could travel. There's a lot of different things you could do. Put some money away for retirement. Do all those things when you are on the right side of the trend. Big Wall Street firms have hundreds of analysts and quantitative analysts who crunch numbers on the all available trading instruments and deliver the best trading ideas to teams of traders to choose from. In fact, I worked on a floor like this. A lot of fun, but I'm glad I'm not there anymore. And the algos took over, right? As an independent retail trader, you are alone against an army of these wolves of Wall Street, right? Traders, analysts, central banks, and sovereign wealth funds, and their massive data crunching computer networks. Now, you don't have to fight the big Wall Street institutions alone. You have a powerful number crunching Forex trading analytical super tool at your disposal. And best of all, it never takes sick day, and it costs hundreds of thousands of dollars less than a quant analyst on Wall Street. And here are some examples of trades entered as a result of this uniquely powerful trend spotting software. This is a euro yen. We look at the year. We did use a 200 moving average on our chart. The strongest was actually the yen, and the weakest was the euro. So what we got short, the euro yen. It's like, I can match. It reminds me of Granimals. If you're old enough to remember something called Granimals, you have the clothes, you got the shirt. You like a shirt like this, right? You got the zebra, match it with the lion, and you get the wrong one, the wrong match. You look stupid when you went to school, right? But each tag, the tag had an animal on it, and the kids are supposed to be able to match their clothes using the animals. And I had a giraffe and a zebra, and it just didn't work out, right? But we just matching the stuff. So I just got short the euro yen for 21 pips. Big drop. This is the entry, and this is the exit, and this is what I made on that. And this is that, not bad, 350 something bucks. Not bad for 21 pips, right? Here's the one I said, Kiwi yen in New Zealand dollar is called the Kiwi, is a name for it. And the Japanese yen, the Kiwi was the weakest, the Japanese yen was the strongest, and guess what? Got short there. Brightened up my screen so you could see it. And made $466, lickety split. Wow, we have our short or moving average or 50 above the 200, and gave us a nice a downward bias, and we were able to make money on that, right? So you who are on this live workshop are the first traders to have the opportunity to actually use this pioneering pip getting tool. But tools only as good in the hands of a skilled craftsman. So those who act immediately and who qualify will be personally mentored by me and how to use this tool for 6 weeks to get the precision entry and next strategy that companies finding the strongest trends. Okay. And those who act now will have access to my unfair advantage over the market. My unfair advantage will become your unfair advantage, as I am literally handing over to you the keys to the Forex trading kingdom. Okay. A couple of days ago, I used TrendSpotter CSI under a AUD USD short. I was able to cash out for 87 pips very easily. With results like this, the truth is that I'm not ready to release this widely, and I likely may never release it to a wide audience. In fact, maybe if you see me, I probably released it a long time ago. And I decided to take it off because I just didn't want everyone to have it. Okay, it's like a jerk. It's like, so I've enjoyed having this unfair advantage over the market. The more I share the software, naturally, the less of an unfair advantage it becomes. That's why I'm forced to limit this offer to the first 12 people who are totally committed to being successful. And I'm keeping this trend spot.
Reminder. Thursday night football. If you finish this,
Alexa,
just let me know you're done.
Done.
Otherwise, I'll remind you tomorrow at the same time.
Alexa, stop. Okay. I'm keeping this trend spotting software strictly in-house between me. Here we go.
This is
Okay. So the small group of traders that are committed traders, I want enroll in this new coaching program. And so here's my offer to you today, as I promised earlier. So introducing the Forex or Paydays or Trend Spotting Mastery Program. You're going to get 6 weeks of intensive coaching, 18 hours interactive group coaching, so you can have all of your questions answered as they arise, so you can get started finding and trading the big trends with confidence and consistency right away. We get lifetime access to the powerful Trend Spotter tool with a signed non-disclosure NDA agreement. Allows you to find numerous trade setups on 9 time frames, so you can spend less time examining hundreds of charts for good trading ideas. So you can trade with the strongest trend in the right direction, and this puts the odds in your favor, so you can potentially make more money with less time and effort, and this allows you to have more time to do what you want. Trend spotting training calls will be recorded, and your access is in a special password protected membership area. So if you can't make the session or you want a refresher, get full access at any time, it's all yours. Plus, I want you to know that we will schedule a private one-on-one coaching session immediately after you enroll, so I can understand your current trading situation, challenges, and make immediate recommendations to improve your trading and get you quickly over any hurdles. This way, I can also customize your trend spotting mastery coaching to your unique needs. Okay. And I'll personally mentor you in how to identify the strongest trends and amass pips on an ultra consistent basis. After completion of the mentorship program, you'll be able to keep and use the Trend Spotter CSI software under a strict non-disclosure agreement or NDA. And the non-disclosure agreement exists to protect our steep unfair advantage over almost every other trader out there. Consider the immense cost to you and those who care about of you not knowing how to consistently spot winning trends, or not having the process made easy for you via Trend Spotter CSI. Pause and think about the hundreds and thousands of dollars that you'll give up over time in the form of stop outs from trading in the wrong direction. Now, think about all the trades that you already missed and the reliable trading income you left on the table because you can't consistently trade the right trend in the right direction. Is this costing you the ability to go pro with your trading and successfully trade from home? Without this elite training and these proprietary tools, it's like walking around with a blindfold on while your top traders have their eyes wide open to what is going on at all times. Okay. Now, my unfair advantage will be your unfair advantage. And when you apply for the special program just weeks from now, you'll know how to suck up pips right out of the trend and have a total leg up on all the other traders. Without the detailed trend spotting insights I'm going to share with you, it's really like walking around with a blindfold on. And the bottom line, you will never achieve your trading goals if you can't successfully trend spot. I have shown you a way of doing it manually, but without the automation of the trend spotting CSI software, you will have to spend large chunks of time combing through charts and comparing them, looking for the strongest trends. So let's talk. I want to be absolutely sure I can help you build your profit more from your trading quickly and easily. So you're going to fill out a short application, and then you go to our website and click the application. And due to the level of commitment I give my trading students, and a few people I can allow to use TrendSpot CSI. I only have 12 spots open, and once they are gone, they are gone. The work in a first come, first serve basis. So don't wait and regret not acting when you could. Click the link in the chat box, and we're going to give you the link. We'll give you the new link, right? The new link. Stop. We're going to do okay. Let me go ahead and pop that new link here. And telemarketing. Yeah, oh please. I love telemarketing. No, I don't. And I'm gonna get you that link. All right. Oh, let me show you. Here we go. Oh, can I move it over? What's going on here? Oh, I know. Okay. So I'm going to, let's do this. Share my screen. Share screen. Okay. So this is it. This is a plugin for MT4. For MT4. Right? Can I just move this? Yes. Okay. And maybe I can make it bigger. I can. I know I can. Size. How about 6? Close. Okay. So there we go. So I have it's set for a day 56. So we're going to actually, I'm going to set it for the 50 period moving average daily, and we can see that the strongest currency is the US dollar. And we can see that the weakest is the euro. And let me move this up a little bit. Yeah, there we go. And we can see that the Canadian dollar is next, Aussie is next, followed by Swiss franc has a 1, Kiwi dollar is -1, Japanese yen is -3, pound is -6, euro is -7, right? And then we can actually look at, okay, this is actually a pretty strong. Yeah, it's very weak. It's a strong downtrend, right? So we look at euro Aussie, we can look at euro dollar. This is on euro pairs. You can also change it to pound pairs. Pound dollar is weak. Look at this, pound Aussie. If you want to take a screenshot, you can say, look, here we go. And then here are our Swiss pairs. And you can see that they're neutral. The moving average bias is strong, but the strong weak bias is neutral. So we usually don't want to trade the neutral ones. Here's our yen pairs. Here is dollar yen currently trading at 47.35. The moving average price is 43.76, and it's strong. The moving average is strong, and the strong weak bias is strong as well, right? And we can also look at Aussie pairs. We can look at Kiwi pairs. The Kiwi pairs are neutral too. And then we have CAD pairs, and then we have all pairs, and then we can click. Since we can put 14 on one panel, we click next to see the other panel too. And sometimes what I'll do is I'll open up 2 versions of it. And when I open up the 2 versions of it, we can have both sides. We can take a look at both sides. Now, if you want to look at the 200th moving average, you can either open up another panel, right? We can open up another a panel. All right, we can open up another panel. And again, there's the other panel. The other panel's gone, right? Too bad. Okay. But we can go up to the 200. We can resize this too as well, make it larger. And this is the 200. And we can see that Swiss franc is no. Well, I had the 200, 215, 210, 215, 210. Oh, there we go, 200. Right, you can see the switched. Okay. I get in the end of day here. Week right there. So we can see like pound yen very strong to the upside. And these are higher time frame charts too, right? So if this is something that you might be interested in, actually, see if we have a link. You can go over to our website at Elite Traders University. And if we can find that, let's go ahead and get to the website. Okay. Okay. We gotta go to their website to go to. Yeah. Okay. You can go to our website, elitetradersuniversity.com, right? And we might have I'm sorry. Things are just a little, you can go here. And what you can do is go to submit a ticket. That's what you can do, right? And then go ahead and submit a request. And you submit a request, go put your email address in there and put in TrendSpotter, and then go ahead and send us your email address and your interest, and we'll go ahead and get an application out to you, okay? So with that, I will go ahead and sign off for today, and hopefully you enjoyed this and you learned something from it. Write something about in the comments, maybe a topic that you want to learn about, or tell me how do you find the strongest trend. This is Dr. Greg McLeod signing out for Elite